All right. Well, my name is Justin Huron, and I am the immediate past president of our Southern California CCIM chapter. We're going to have a really great lunch and learn workshop today titled Beyond the Appraisal: Strategies for Brokers to Drive Value and Save Clients Money with our platinum sponsor, Jeff Eggleston. Before we jump completely into it, we'll just go over some housekeeping stuff, some upcoming events. This is our board of directors for 2024. We have a really great board, and this is a volunteer-run organization. So I want to thank each and every one of the board members here. If you have any interest in getting involved in the board, we'd love to have you. Please reach out to anyone on this sheet right here, and we'd love to get involved in our chapter on a deeper level on the board. Want to thank all of our platinum sponsors. So again, we're a nonprofit. Without the help of our sponsors, none of this would be possible. So I want to thank Sinmar Associates, who you'll be hearing from today, Live Oak Bank, Specialty Tax Group, and Beacon 1031. Our gold sponsors are First Citizens Bank and Aperture Wolf Studios. Our silver sponsors are Asset Preservation, Trowbridge Law Group, Gene Trowbridge, CoStar, Asheville Associates, and City Service Paving. And last but not least, we have a couple of bronze sponsors, Assured Partners and McAllister Geoscience. We have a few really fun, exciting, informative events coming up in the next couple months. This one is next week, and this is going to be held at the CoStar campus in Irvine. I want to encourage everyone to attend. It's titled LinkedIn What's Next, and we're honored to have JD Gershbian as our speaker, and JD is an expert on LinkedIn. So whether you've never used LinkedIn or you're a LinkedIn guru, I think you'll get a lot of really valuable information out of this. He'll go over how to make your profile valuable, how to make money off of LinkedIn and really drive business. So it should be really good. He's a really good speaker. He's really fun and engaging, and I think you guys will enjoy it. So that event is sponsored by Trowbridge Law Group. So I encourage everyone to come. You can sign up at socalccim.com. And that'll be next Wednesday. It includes lunch. It's from 11:30 to 1. And then October 17th, we have another workshop virtual. This is going to be with our own JP Ledesma of Beacon 1031, and it's titled Unlock the Listing, How to 1031 Exchange into DSTs, How 1031 Exchanges into DSTs Can Grow Your Business. That should be really fun. It's another free virtual workshop. And then we also have a syndication and crowdfunding virtual workshop. This is by our own Gene Trowbridge, who founded our chapter. And Gene teaches a Ward Center CCIM course on this topic. So we're able to have this workshop online. It's from 1 to 4. It's October 29th. I encourage everybody to sign up. It'll teach you how to attract private money while complying with securities laws, how to structure your deals, what legal entities to use, and what powerful tools can help you raise big money, and understand the way in which lenders look at financing real estate owned by syndication. So Gene is really a guru on this, and I encourage everybody to sign up for it. It should be really fun. And then we have one CCIM 104 course. This is the first week in October. It's going to be held in Anaheim. So if you have a need to take 104 in order to sit for your exam, I encourage you to take it. Before we jump into this, I just want to introduce Jeff Eggleston. He's a seasoned commercial real estate appraiser with 34 years of experience in Southern California. As a president and CEO of Sinmar Associates, Jeff leads a respected commercial real estate appraisal firm that's been serving Southern California for more than 3 decades. Jeff's expertise spans nearly every type of commercial property, allowing him to quickly identify key issues and streamline complex appraisal process. Under his leadership, Sinmar Associates has developed a strong reputation for its specialized work in estate planning appraisals and portfolio use for IRS use. The firm also provides valuable appraisal service to federally regulated institutions and banks for property purchase and refinancing. With a keen interest in fostering industry relationships, Jeff actively seeks to collaborate with brokers to ensure a smooth appraisal process for all parties involved. His wealth of experience and commitment to simplifying appraisal challenges makes him a trusted figure in Southern California's real estate landscape. Jeff is a friend of mine. He's been a longstanding sponsor of our chapter, and he's just a really great resource. So I know you guys will get a lot out of today's presentation. And like I said, he's a great resource. If you have any questions, you want to reach out to him afterwards, or if you have any question about any of your own properties, give him a call. He picks up the phone. He's just a great guy to deal with, and he's helped me out a ton personally. So without further ado, I will let Jeff share his screen and we'll get into today's presentation.
Thanks to you, everybody. I'd like to thank the program team for the opportunity to share these insights. I don't consider myself a natural public speaker, but I'm passionate about this subject and eager to share my knowledge. I've actually got like 40 slides here, which we will move through very efficiently to allow time for discussion afterwards. As an expert in the commercial appraisals, I bring years of experience and a unique perspective. I recognize that each of you brings your own expertise to the table, and I'm confident that the information I'm about to share will enhance your understanding of the appraisal process, enabling you to provide greater value to your clients. So let's just dive in, and hopefully this is productive and engaging for you. I just want to start with a quick story. I had a client that was an experienced property investor and made an offer on an office building that was advertised at 50,000 square feet for $10 million. That was the list price. He made an offer on it close to the list price, but during the due diligence process, the appraisal came back at 8.5 million. And what ended up happening was the marketing brochure had included areas that were not rentable, like a basement. And so the actual rentable area was only 42,000 square feet. This caused a lot of problems, obviously, in the negotiations. And what our client learned was that the importance of doing due diligence before making an offer. Checking everything out. And let's dive in. It's just something to talk about. Here's a question we get a lot from brokers. Why doesn't the appraisal match the purchase price? So hopefully today we'll kind of understand that a little bit more, and the broker's role in facilitating a successful appraisal process versus brokers. We have a different perspective. As appraisers, we're looking at objective analysis, we're looking at the property specific information, and we are kind of tied by certain professional standards. I believe as brokers, you guys are using the market knowledge you have at hand, and you're using your intuition, and you're focused on comparable sales, and you're considering potential future value, as opposed to we're dealing with historical information, things that have already closed. And so sometimes there's a disconnect because of that. Again, current market value for appraisers, potential future value for you guys. Again, we're bound by strict methodology on how we do things to come up with numbers. You guys, you're trying to figure out, hey, what can this thing sell for? I think, as an appraiser, we need relevant and recent comparables. We need property information, detailed, and we need financial data, current and historical. In terms of the brokers, you need to avoid sending us contradictory or irrelevant data. You need to be able to explain the property features, and this is a big one, provide context for your value opinion. So if I'm having trouble with an appraisal and a value on a purchase, I'm going to call you guys and ask you, how did you get that number? What are you basing that on? I get this conversation all the time with brokers, and we have to figure out how we bridge that gap, and if we're missing something as appraisers that that I don't know. Again, I ask for comps. I've got CoStar. Most appraisers should have CoStar for commercial properties. If they don't have CoStar, you got a problem. If they're trying to just pull stuff out of public records, they just don't have the information they need, and they're not paying for it. But I'll ask somebody, to send comps, and obviously they're trying to support their values. So what do? They just send the highest comps possible, pull in all kinds of stuff. So it's really kind of interesting. And they also ignore or downplay the property issues. But, we need to know those, and we need to all be on the same page with it. We can work around it usually. For leased properties, failing to take into account, the income and the impact of the income on the actual property itself. So here's a quick case study. You can see what we've got there. So a client received broker's opinions of value on their properties. This is a portfolio. And the values they received from the broker set an expectation. Although the client was, sophisticated enough to know that they were too high. They just didn't know how out of line they were. But due to the long-term unfavorable leases in place, the difference between my values and the broker's value was like $100 a square foot. Right. And so obviously, as soon as they get my appraisals, what's wrong? What happened here? But that's kind of a disservice to your well, that broker, that was a disservice to the client, because now they're having to think about this and figure it all out. And I would imagine that those clients may not want to use that broker, considering, the result from the BOV was so far off. But again, a good example is a broker doing proper due diligence, contacting an appraiser for some input. Working with somebody right now, he's got a family, they want to kind of understand the values a little bit. So he doesn't know. He's just contacted me and said, hey, check this out. What do you think? Can you give me some ranges to help out? And so we're looking at that right now. Also, Justin and Will Hugron, I'm working with them on a couple of properties where they're trying to get their clients, the owners, to have a realistic view of what these properties would appraise for, so that when they're negotiating and getting offers, they know what the result might be. Because again, if somebody's willing to pay a high number and then it goes to a bank for a loan and then the appraisal blows up, it doesn't do anybody any good. So again, Justin and Will are very good examples of collaborating with appraisers to understand the value of the properties, identifying, getting appraisers involved early, just to identifying valuation issues, figuring out what kind of data you're going to need, setting expectations. Again, when you're as brokers, I know you guys are all at different levels. I mean, some of you just have it all together. Some of you, maybe you're just kind of coming up in the brokerage world. But again, just get comprehensive information from your client, understand the property that you're marketing. You really can't default to, this is just what they told me, and then put a little disclaimer at the bottom that we don't really rely on this because we didn't verify it. Spend some time understanding your properties, and it'll help things down the road. And again, develop a relationship with an appraiser, a commercial appraiser. There's a lot of us out there. A lot of us like talking to you guys. And so just to have that going. Again, detailed information for leased properties, provide relevant market analysis, and highlight unique properties. That's all been said before. Educating your clients, setting realistic expectations. I love setting realistic expectations with people. You can discuss strategies ahead of time if the appraisal comes in low. I know there's a lot of brokers out there who already know that the escrow price is probably going to be hard to hit on an appraisal. And so they should be anticipating what that looks like, right from the get-go, because there are strategies. I've heard people talk about them, about what happens when it comes in low. So again, by building the appraiser relationship, you can understand my side of the fence. I don't understand your side of the fence completely. I'd love to, that's why I like to talk to you guys, understand what you're dealing with on your side of the fence. But if you understand what I'm dealing with, then it might make it easier for all of us. Obviously, consider inviting us to meetings to discuss these things. We're always happy to do that. Usually when you get an appraisal, you can use it to justify an offer or counteroffer. If you guys have sales and we have sales, we can talk about those sales. I mean, a lot of times we both have the same sales, but you're looking at them different than we are. Maybe we have more information. Maybe you have more information. That's where discussion comes in, where I'm like, oh, I'm sorry, I missed that. I didn't realize that was part of the deal. And then all of a sudden we can change our appraisal based on information. But, again, we got to be able to talk to each other. Handling low appraisals. What happens when you get a low appraisal? You can request a review. Generally speaking, if something comes in below the sales price, I'm always happy to discuss that. I talked to Justin about this. Prior to me ever putting in an appraisal below a sales price, I've already talked to the brokers. I will not submit an appraisal until I talk to everybody and figure out if I'm missing something. What did I miss? Did I miss some comps? Talk to me. And if I have to come in below, then I do, and then we can have a discussion later as well. But generally, that discussion should happen before. So again, I tell brokers, if you have an appraiser that submitted an appraisal that's below the sales price and you have never talked to them, there's an issue. They should talk to you guys, especially on the commercial side. I don't know what happens on the residential side, but on the commercial side, we should be having those discussions early to try and avoid blowing up the deal. Let's see. Educate your clients, prepare for contingency plans, and let's see. Bridging the gap, just again, understand the appraisal process, facilitate to help, make sure the transaction goes through. All right, so part two. So that's just kind of an overview of appraisals, and feel free to call me or talk to me about any of that. Part two, I tried to come up with ideas of reasons you would maybe call your clients, talk to them, reach out to them, to let them know that you've got their back, that you're thinking about them not just for the transaction, but just as property owners. Some of these may make sense, some may not. Let's see what happens here. Property tax appeal. I don't even know what that means to you guys as brokers. As an example, I had a client that we did a tax appeal for, and we found out the property was valued $2 million too high. The appraiser was $2 million high, on it. Now, obviously, the owner knew that the assessment was too high, but now they have to demonstrate to the assessor. So we all understand that. But what about you guys? I mean, can you go and find property records on, properties your clients own? And, just take a quick look at the assessment and go, hey, that looks like it's a little out of line. Maybe you can be proactive and help them and say, you might want to look at this. Because a lot of times assessments can be inaccurate. Let's see, as an example, the savings to your client, again, if there's something there, could save them, even on a $200,000 swing, it could save them up to $6,000 a year in tax savings. So it's something to look at, something to maybe consider if you want to, like you guys do cold calling, I think. It's like, I don't know. Actually, I don't know what you guys do all day as brokers sitting behind your desk. But, this might be things to think of. Gift tax changes are coming up in 2026. Again, not sure how you would use it, but there's a lot of your clients who maybe consider gifting some of their property to their heirs. And if they don't do it before 2026, that exclusion, goes down. And so they may want to start considering doing that. So it might be something as a call, you call them up and say, hey, are you considering doing any of this? You might want to get on top of it, because it's a process that has to happen in terms of the appraisals and everything else in order to gift tax or to give gifts, at the time. Yeah, so it's going, what'd I say? It was like 12 million. Now it's going down to 5 to 6 million. Is that right? Does anybody know? Anyways, we can talk about that in discussion. Strategies for your clients, accelerate gifting plans before 2026. Consider setting up trust for larger gifts. Again, some of this isn't in your wheelhouse because you're not CPAs, you're not accountants, you're not lawyers, but it's just, hey, a little bit of a heads up if you're talking to a client of things you might want to talk to them about. Another thing that I recommend to all commercial property owners is to get a title report like once every 2 years, right? Once every 2 years, it costs $500 to $750, and you can check if there's anything odd on your property or anything has been added to your title that shouldn't be there. I was told by a title guy recently that they went to, somebody was selling a property. It was in escrow. They pulled the title and they find out somebody has put their name on title, on the grant deed or something. They filed this thing and it's now sitting in the title report, and they can't close this until they clear it. I'm like, how can somebody just arbitrarily put their name on your property? And again, he said they can do it. And it turns out that this person did it on several hotel properties. And so it was just a nightmare for them to try and close this property, get it all cleared up and figure it all out. So, getting a title report and looking it over, and that's something that I don't know if you guys as brokers do on a regular basis, but if the client pays for it and you say, hey, I'll just take a look over it, make sure there's nothing weird here that's going to affect you in the future, it gives you a chance to get ahead of it for them, as well. Title reports, again, liens, encumbrances that people may have put there that you don't know, plotting easements, anyways, avoid disputes with neighbors. Alta surveys. I don't know how many of you are familiar with Alta surveys. Again, something I recommend all commercial property owners do, even if they're buying a property. And again, I've had experience in the past where I ran into an investor who on all of his properties, prior to closing, prior to everything else, he got Alta surveys. That was just his, way of doing business. And the property I appraised in Santa Ana, it turns out there was an issue, and it was a big issue. And it's like, hey, once he found that out, he stopped. He did not go forward with it because it, impacted the value of the property. Again, for you who don't know what an Alta survey is, it's a very detailed survey of lands, the land, the boundaries, the property, where the buildings are, if there's any encroachments, if there's any issues there. So along with the title report and an Alta survey, you're going to know everything about your property, that could be a detriment to it. Alta surveys, again, property boundaries, improvements, easements, utilities, zoning. That tells you everything your client will need to know about their property. Identifying potential issues reduces risk of future legal disputes. Man, I'm working on a property right now out in San Bernardino. The guy bought the property. It was adjacent to his property. He had been seeing that property forever. The adjacent property owner decided to sell. He bought it for his trucking yard. He buys the property and he was going to start using it, but then it turns out, and he bought it without brokerage representation. It's just between private parties. And then all of a sudden, the property owner on the other side decides to exercise his right to an easement to drive through this guy's property. And he pushes the issue. He creates, by all rights, it was there, right? But it basically destroyed his property because now he has to have trucks and access coming across his property from the adjacent property owner. And so he's in a dispute, with title or whoever else. But, it was just amazing that if everybody knew that was there and the potential of its impact, they could have been, addressed early on. But anyways, so that's that. And hey, cost segregation. I don't know. Is Geraldine on the line here? She in the room? I don't know. She's one of your platinum sponsors. I advocate for cost segregation for all commercial properties. If I have contact with a buyer at any level, I usually ask them, look, I don't know if you've considered cost segregation, but when you closed on the property and you're interested, let me know. I'll refer somebody over. And, it's something that every commercial property owner should look into. And, again, it saves them, accelerates depreciation, and it's significant tax savings. I've heard it explained by some brokers. It's like leaving money on the floor. If you don't do cost segregation on your commercial building, you're just, throwing away money. But Geraldine, who is one of the platinum sponsors, she gave a talk on this, a great talk. That's a great company over there. And so they should, she can help you out understanding what that means. And this is just something as a broker, if you're not familiar, if up and coming, and you haven't heard about it, get familiar with it for your clients for sure. Yeah, increased cash flow. Anyways, and it can go back 3 years or more. I think that's what Geraldine was saying. And that's it for me. My thought for the day: love is a choice, not a feeling. You guys can figure that out. And if you want to talk to me about that, I'll talk to you about it. So that's it for me, Justin. Thank you.
That was awesome. Thank you so much, Jeff. I really, I like some of your ideas on, getting in contact with past clients and maybe prospective clients and going over property tax appeals with them. If somebody bought a piece of land 2 years ago when land prices were much higher, and the assessed value is double what the market value is today, getting in contact with them. And if you have a chance to save them money, that they're going to be loyal to you. So yeah, that's really
Yes.
valuable. Does anybody have any questions here?
I do.
Jamie's got a few. Okay, go for it, Jamie.
Hey, Jeff, congratulations on 26 years with Sinmar, first of all, and thank you for doing this. In my 20+ year brokerage career, most of my clients decline the Alta survey just due to cost, and it adds time. And I've only seen really REITs or higher level, like more sophisticated clients take advantage of that and require that before closing escrow. But you're saying everybody should do it.
Yeah, it's best practices, right? I mean, and when you say cost, I mean, yeah, I don't know what's costly. It's not 10,000. Is it 5,000? Is it 45? Depends on how complex the property is. But I think I just talked to an Alta survey company the other day on this property I'm doing down in San Diego for AmVets, American Vets, a thrift store that's dealing with some kind of encroachment. And it seemed reasonable to me on the property that the cost of that Alta survey was not going to kill you. And, it might. Again, I'm really loose with money. I've never been really, when people say that's costly, I usually think, is it really? Considering what you could save yourself, that's up to you, as an investor, as your client. But it's a big buy, right? On a commercial property, it's a big buy. So yeah, that's what I would say.
Great. And my
Yeah.
next question has to do with what you mentioned about the gift taxes before 2026. If you could just explain that a little better, I'm not really familiar.
Maybe somebody else could give a little bit of background on that, but it's just the exemptions are going down. How much your lifetime exemption is dropping in 2026. So if you own a lot of commercial property and you've been thinking about trying to gift some of it, you're going to hit the exemption faster after 2026. Right now, you have a larger margin. In other words, like I think it's up to 11 million, or I mean, I'm sure Laura knows kind of what it is, but somebody knows that it's going to get cut is what's happening, so that people need to start thinking about it now before it hits, if that's their strategy. Yeah.
My understanding is it's basically the same as the estate limits in terms of stepped up basis. So it's 13.2 million this year per person. Right. So 26.4 married filing jointly, and then it goes down in the low 5 million range.
Yeah. Yeah. And that's all you're going to be able to be exempt from once it hits in 2026. Thank you, JP. Appreciate you jumping in there. Yep.
Thank you, JP. And also just to note, JP's event is actually an in-person lunch and learn, not a virtual. So please join us.
This is Al. I have a question. So Jeff, going back to your case study where there was $100 a square foot price difference between you as an appraisal and the broker. I'm just wondering why the seller just assumed that the broker was on the wrong side. And before you submitted the report, did you discuss it with the broker that you're going to be submitting it to the seller?
This is actually a private party portfolio case. So it wasn't really a sale or a purchase. It was just the broker provided the BOV to the family. And so they had expectations on what their portfolio was worth. And so the broker was basing it on owner user sales is what he was doing, and did not take into account that they had these long-term unfavorable leases that were seriously impacting the value anybody would pay for these properties. So a little bit different. But again, I always talk to the brokers ahead of time before I submit anything. But in this case, I wouldn't have talked to the broker because it's a BOV. And that didn't really come into play here. Yeah.
No, that was reason. Okay. And so, and the other point you mentioned is that why is it necessary to, or I don't think you said necessary, but why do you recommend that brokers should educate the seller on the appraisal process?
May not be on the, well, I mean, they should understand that, there might be some issues coming up. I think, what was it like Justin? I think it's Justin's property in Laguna. He's got a couple properties. That property is listed for sale, but the owners are trying to sell it, but their expectations on the value may be unreasonable. I haven't figured it out yet. They haven't actually pulled the trigger, but my appraisal and getting me involved will help the seller understand realistically what it should look like if it ever goes to a bank. And then they can make decisions on, whether they're asking prices or what they really want for it. Because there's a lot of sellers out there. It's like, nope, that's what I want. I'm not changing it. And I've seen properties sit on the market for 2 years. And so unless you get somebody involved that can break that tie, that property may never sell. Yeah.
All right, thanks.
Yeah.
It sounds
sure.
like Jamie has another question she'd like you to speak about when a retroactive appraisal would be required or necessary, or maybe a date of death appraisal.
When would that be required?
When would it be necessary?
Well,
Or
yeah.
required?
So anytime there's an event, somebody that passes away that owns a property, it triggers an IRS tax event. So they need an appraisal. Like the first one would be the step up basis, to set a value at that time. And so that would be retroactive. Anytime there's a dispute and they have to go backwards in time to a date where, there was a dispute, we would have to do a retroactive appraisal for any kind of disputes between partners, date of discovery, like that title report one was a date of discovery back in December. So I'm establishing value back then, not value today. So yeah, that's when it would happen.
And
Does that
Jeff,
answer your question?
one more question. When you do an appraisal, do you actually do like a site visit, a walkthrough?
Yeah, there's many different levels. I mean, typically we do. I've done appraisals where I haven't been to the site, like at a motel in Barstow. I'm like, if you want me to go out there, you can pay me to go out there. But reality is, I bet I can do everything I need right from my desk with all this information. Our only requirement is that whatever we provide is a credible result. As long as we have enough information to provide a credible result, which is information, pictures, everything, and we feel comfortable enough to do that, we don't have to necessarily do a site inspection. So, but yeah, many different levels: exterior inspections, full inspections, no inspections at sometimes. Yeah, remote land out in the desert.
Yeah,
Like why go out there?
right.
Yeah.
And then the other thing is, you mentioned there was that one valuation that included basement square footage. How were you able to discover that?
Well, you would just understand what net rentable area actually means and what you can charge rent on, and a basement doesn't include it. And so once you find out that there's a discrepancy, you start talking to the brokers and go, what is this? How come my number is different than your numbers? Let's reconcile it. Yeah. Yep.
Any other questions?
I have a question, Jeff.
Yeah.
Recently on a deal, we had an appraisal come in. It was like a $1 million purchase, and the appraisal came in $70,000 low. I was very confident the appraiser was missing some stuff. I mean, it was already priced really well. Anyways, the appraiser would not take wouldn't take my calls, wouldn't take any information from me. And then we tried to go back to the buyer's bank and appeal it, and they weren't willing to entertain an appeal. It was very frustrating. I know you mentioned when they come in low, some of the procedures, one of them was to appeal it. This particular lender wouldn't allow it. The way we ended up solving it, to the detriment of the seller, but I didn't represent them, was we split the difference. So they lowered the price $35,000, and then the buyer paid $35,000 more than the appraisal. So it worked out in the buyer's favor, but I just was surprised that nobody said they could talk to us about it.
Well, let me ask you, what kind of property, what kind of lender was it?
It was an office building in Riverside, and it was a credit union.
Yeah, see, that doesn't make sense to me as an appraiser. And 70,000, sometimes they say, why do the appraisals always come in at the sales price? Or, why isn't it above the sales price? Sometimes it is, but generally if we're close and we can support it and it's bracketed, there's no reason for us as appraisers to come in $70,000 low.
Yeah, I thought so too.
It's just like, screw it. The path of least resistance is I've got the information to bracket and support that number. And so, yeah, I'm going to do that personally. And quite honestly, it bugs the heck out of me, Tony, if you tell me that an appraiser is unwilling to talk to you about the appraisal, about anything. Sometimes you have to go through like, hey, credit union, is it okay if I talk with the appraiser? But they should let you. There should be, there's something missing here, especially if the deal is going to have to be renegotiated. So, that's frustrating to hear that, Tony, that is going on out there. Now, I can see some banks are like, no, it is what it is. We don't want anybody getting involved. And again, that's just too bad that some of that happens, as well. But like I
Yeah,
said,
I've been told like
yeah.
some banks, they have like appraisal management companies, like third parties that are the liaison, because they don't want us brokers to influence the appraiser's decision. But like
Yeah.
literally, I'm getting 5 calls a week from appraisers that want information. And so
Right. Right.
makes
It makes no sense. And the credit unions are generally AMCs. They're generally managed by AMCs, and they cut off that ability to talk to people. But there should still be an appeal process. There should be hey, I think the guy missed something. But how would you know that unless you saw the appraisal and were able to determine what was going on? And again, I get all kinds of times when I do have brokers say, hey, Jeff, take a look at this appraisal. Can you quickly tell me if something's wrong? And it takes me, 15 minutes to read an appraisal and find out if something's wrong. And sometimes I do. I found math errors. I'm like, yeah, the guy had a math error, didn't carry down. And if he would have just used the numbers he had up here and carried the math down and checked his math, this would have been fine. But, there's a lot of guys that are in their offices by themselves reading these appraisals at the 11th hour and not double checking their math, and it goes out the door, and so things happen.
there's no law preventing us brokers from talking to appraisers or any ethical violations that you're aware of.
No, it's on me to stay independent. It's
Yeah.
on me, I have to protect myself. So if you want to try and influence me, go for it.
Yeah.
That's on you. But again, there's a lot of appraisers who don't handle it well and don't know how to handle it and can't hold a line. It's like, we can agree to disagree. And that's happened before. And I know good brokers will be like, okay, I get it. I understand where you're coming from. All right, let's just let it roll and we'll figure it out on the other side. We'll renegotiate it. But it's nice to have a conversation and understand what's happening beforehand.
Thank you.
Yeah, you're welcome.
Jamie, did you have another question?
Yeah. Hey, Jeff, when
Mhm.
I'm in the middle of an escrow or just getting started, usually the lenders drive the appraiser choice based on a list that they have. How can we get you engaged on our deals for a situation like that?
You really can't. You can't do that. That's how they keep it all above board and, kind of make sure there's no conflict of interest. Because like if I develop a relationship with Justin and he's in, I'm in his back pocket, oh yeah, choose Jeff. He's going to always, appraise the value, that they want to cut that off. So there's no way to do that. It's just, that's just the reality of it.
I can speak as a lender to that if you'd like.
Yeah,
Sure.
that'd be great, Earl.
Thanks, Earl.
Yeah, so the appraisal is such a vital part of a loan because oftentimes, well, especially banks and some private lenders are lending somebody else's money, depositors' dollars. And so they have to be careful with that stuff. And so the appraisal is so important because if something goes wrong with that loan, and then the lender ends up owning the property as a result of foreclosure, that property had better sell for what the appraiser said it was going to sell for or more, and if it doesn't, then the lender's in a lot of trouble. I mean, not just in financial trouble, but in other kinds of trouble too. So for that reason, lenders are super careful about the appraisal process. So they do have a list of approved appraisers who they have reputation with and whose appraisals have worked out just fine in the past. And sometimes lenders are willing to add to that list. And sometimes they will. And then there's a whole application process that an appraiser goes through and so on and so forth. And then they get on. But when an actual appraisal is ordered, like I have one coming up here, and what's going to happen is that the lender is going to send an invitation to bid to 3 or 4 different appraisers. And then whoever comes back with the most reasonable price and turnaround time gets the order. So those are appraisers on the lender's approved appraisal list. They'll get the order. And then the lender will prepare the appraisal instructions as to what the appraiser is to do. Like on an apartment building, you might have 25 units. So is the appraiser to go in and examine every single apartment, or just maybe 5 of them? So there's a lot of things about the instructions that go out to the appraiser. So it's really a super carefully guarded process of lending, the appraisal is. And that's why that is.
Great.
Yeah.
Thank you, Earl. So then, Jeff, are you doing mostly private appraisals, like unrelated to lenders?
We are on quite a few appraisal lists, and we never have problems getting on. And we have been added lists based on somebody wanting us to be on a list, so that's not an issue. Right now, we are doing mainly estate planning, just because that's where the work is. And reality is that's where I want to be as a company. Because obviously the lenders put down their pencils in 2022, which killed a lot of appraisers out there. So I'm really focusing on the other side of it. But again, we're dealing with them all the time. And I would like to say, to Earl's point, when they send out, 3 bids and it's like, okay, who has the best fee and timing? I do have banks that just do it that way. But I also have banks who are like, I don't care if the guy's lower and faster. I would prefer somebody else to do it. In other words, they should be choosing based on who the best appraiser is as well, not just the lowest. Because Wells Fargo used to do that. They used to just pick the lowest bid, and it just got really ridiculous. I do have a question for everybody, and maybe somebody knows this. Does anybody know if anything happened to the company or the appraiser that appraised Trump's penthouse at 33,000 square feet? Does anybody know? You know what I mean? It's like the appraisal was based on a square footage that was just 3 times the size. And I think it was like Cushman or something like that. But I never ever heard if anything happened to those guys, for doing that. But if nobody knows, that's fine too.
Thanks, Jeff.
Yeah, you're welcome.
It looks like Josu had a question about 1031 exchanges, which I know is not your area of expertise, but we do have an event coming up October 17th on how to 1031 into DSTs with JP Ledesma, so be sure to check that out.
But let's hear the question for JP. Would that be okay? I'm okay.
Sure.
We got a little bit of time. We got like 7 minutes.
You're still on here. You're welcome to go on camera and ask a question.
Hey, thank you very much, everybody. Hi, Justin. Hey, Jamie, and everybody. Yes, you know what? My 1031 exchange is, how long do they need to reinvest that money that, when they get it from the property, or they have to immediately transfer from one side to the other?
I think the question was related to timelines with a 1031 exchange. So essentially, it's like a normal sale on a property, with the one exception being that at the end of the sale, the proceeds don't go to the owner, the proceeds go to a company like asset preservation that holds the money for you, right? And then once that happens, from your closing, you have 45 days to identify whatever you want to exchange into, and then an additional 135 days to actually close the transaction. So those are the legal limits. Does that answer your question?
Oh, yes, thank you very much. Appreciate it, okay? And Jeff, I have a question for the, appraisal. If a property appraised, Okay, but the lender finds something discretion because they're investors out of the country, foreign people, so they change the whole rules and regulations. When it comes to that, the new lender will, require an appraisal. If we show you that appraisal, would that help you, or you would not take that in consideration?
Oh, no. I always request copies of prior appraisals, and only for the fact to see what expectations are, number one. Also to see any information in terms of the site, the improvements, zoning. It's going to expedite things, right? And again, if you hand me an appraisal and it's like $2 million, and I'm looking at that thing and I'm going, okay, there's something wrong here. I'm going to stop everything and say, well, I don't think we're going to be able to hit that number. So you may not want to, engage me. But anyways, yeah, I always ask for prior appraisals. Some banks don't like that. They don't like prior appraisals being introduced into the process. But, it's information. And again, I am responsible to be impartial, and to provide the best service for, the public trust. And so again, I use that for information. So yeah, I always ask for it. Absolutely.
Oh, thank you so much, Jeff. Appreciate it, okay?
Yeah.
Great. Looks like Al's had his hand up. Do you have a question, Al?
Oh, yes, thanks. Hey, Jeff, do you give any opinion on appraising land or the lease rate or?
Well,
No?
we when you say opinion, I mean, we do market rental surveys all the time. That's an appraisal. Land, we do appraisals on land all the time. Problem with opinions of value on either one of those, you cannot get to an opinion on land generally or rental rates without some significant research, and it's just kind of a disservice to throw a number out there. So it's really like land, you got to find people in the area that know that area, that brokers that know that area and what's going on. Same thing with rental rates. You got to find brokers that are doing leases that would give you a general idea, because it's way too costly in terms of time for an appraiser unless we have the information already, or like industrial land, maybe we've done something recently. Never hurts to ask an appraiser, because again, I'll look in my files and I said, oh yeah, I just did something right there. I've got a bunch of rent comps. Let me shoot those over to you. Or I could say, yeah, I can't help you. Yeah, exactly.
No, that's not. The reason I'm asking is because I have this 160-acre parcel of land in which in LA County near Lancaster, which I believe is a perfect land for solar farm. And I have tried every solar farm developers, and then either they just don't return the call, or I just can't get any ground lease rate from them. So I thought maybe an appraiser would have some opinion.
Well, yeah, they'd have an opinion, but again, in order to get to any real
get to
number,
it,
you'd have to
it's-
pay them some money.
Yeah.
You would basically
Okay.
have to hire them to do that. It's just not a product type that lends itself well to what I call throwing numbers. It's very difficult. Yeah.
Understood.
JP, you have your hand up.
Thanks.
You have a question?
Yeah, I don't want to go off on a tangent or spend too much time on this, but you mentioned you want to look at or open to looking at other appraisals when you're doing appraisal on a property. I mean, at what point in the process, right? Because if you look at it, my thinking is if you look at another appraisal before you do yours, it might cloud your thinking, as opposed to I go out, I gather my comps, and then I see what this other person did and did I miss anything versus what did they miss?
Yeah. And
How do you
thanks
handle
for that question, JP, because I think that's what the lenders think too. They don't want us to be influenced by another appraisal. And I'm just going to call them on. It's like, that's not true. I'm responsible for my own actions, and it shouldn't influence me. I still need to go do my research. I still need to find the comps, and do the analysis. So if somebody is being influenced by that unduly, they're not very good appraisers. That's all I would say. That's my own opinion on that. Yeah.
Great. And then Paul asked if there's an appraisal price list, and Jeff responded that it's case by case. Again, Jeff is an extremely valuable resource to all of us, to our chapter. If you have any questions about specific needs or specific properties, give him a call. His cell phone number and work line are listed here in the chat. His email's there. If you need anything, reach out, and I can tell you he will surely help you out.
Right.
Any other
All right.
questions?
We're right there, 1 o'clock. I think we're good.
All right. Well, thank
Thanks,
you so
guys.
much. I really appreciate it. Thank you all of you
All
for joining. Thank you all so much. Enjoy the rest of your day. See you all soon.
Thank you.
All right, thank you, Jeff.
you,
Thank you,
guys.
Jason.